Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. As I zoom in here, you'll see that I left my lines on the chart from last week where I said we would most likely move up. We did that. We didn't quite hit that target number right there, but we did pull back at this key resistance area right there as we expected. Now look down below, or here as I circle this, this is the CCI, it's Commodity Channel Index. Now, most of the time, and I say most, about 80% of the time, when that line is crossed, like we see here to the downside, we generally continue in that direction for 2 to 4 days in length. And that also applies to the upside. When we cross over that momentum line or the zero line, we generally go up 2 to 4 days. And so now that we are down below that line, I do believe that we're going to head lower. So what I'm going to do is erase my lines from last week, and I'm going to redraw the lines in this downward direction. So I think over the course of the next week, we might see a little bit of oscillation like we did today, but I think over the course of next week, we're going to continue back down in an attempt to test that support level right there. Now, I'm not going to put that as my price target because that would be an extreme move lower, but I do believe that the downside target of 191.56 is something that we could see. So that's IWM. Now, if I look at the diamonds, this is ticker symbol DIA. It's the Dow Jones Industrial Average ETF. It's pretty much the same story. We came up to this resistance area right here yesterday on Thursday. This is a role reversal, by the way. Former support broken here, turned to resistance, and guess what? We formed a pivot point. Now, I'm going to forecast in the same way that we did with IWM. I'm going to leave that all in place because this is a continued resistance area that matches up with that 20-period moving average. You see that blue line right there? So I do believe we're going to head lower on the Dow. We might open up a little bit higher on Monday because there's a very, very slight gap right there. But ultimately, I think we're going to wind up lower on the week. Now look what I'm doing. I'm drawing to the right while looking at the left. Why am I looking to the left here? Because you can see that the angle in which I drew the speed line here is similar to the angles that we've seen in the past. All right, these angles tend to duplicate, right? Again, if you took a protractor out, measured these angles, they're pretty much the same. So if we're continuing lower, I think we're going to continue at the same pace or the same rate of selling activity. You see that? So again, to reiterate my downside target on DIA, that is going to be 327.45 on the downside. Notice as I expand that, we never crossed over that momentum line on the CCI. We hinged lower from it. And that's not the first time that's happened. Look back here, right around the middle of February, we made an attempt to cross over it, and it just did an about face and turned lower. So I think we're heading lower. I could even go so far and forecast where I think the CCI is going to go right there. So that is for the diamonds. Now, let's take a look at QQQ. Ticker symbol is basically the ETF for the NASDAQ market, the tech sector. Same story. Again, we made an attempt to go up early in the week, came short of that target, but pulled back from resistance. And guess what? That moving average, again, acted as resistance. Yesterday, Thursday, we closed with a bearish engulfing candle. Now that is significant because for the most part, every time we see bearish engulfing candles, we see lower prices on the Qs. There's a big bearish engulfing candle as it failed to get back up over the 20-period moving average. Very similar to what we're seeing now. And so I think the downside pressure is still on for the Qs. So I'm going to draw that line just like that in the same angle. The downside target is 325.02. Again, the oscillators are hinging lower. And one other point I want to make, if we look at the advanced decline for the 52-week high-low list on the wallstreetjournal.com page, you can see that on the New York Stock Exchange, we had 137 new 52-week highs. But as I scroll down here, you see this? We had, drum roll please, 276. So we had just about a 2-to-1 ratio negative to the downside, meaning twice as many stocks hit 52-week lows than those that hit 52-week highs. But here we are talking about the tech sector. Let's take a look at NASDAQ. We had 70 right there stocks hitting their 52-week high. But what do we have on the downside? Look at that, 553. That's almost 8-to-1 negative. So keep an eye on this. I keep this website link on the description box there for YouTube. You can go back and reference that. I do that periodically 3 times a day, right around 10 o'clock. Another time I'll look at it is from 12:30 to 1. Then I look at it into the close. And as we do now, of course, I look at them after the market closes to get a good final count. But that is very negative right there. So again, the Qs I think are going lower, mainly because of the 8-to-1 ratio and the oscillators turning lower. But I want to look at the spiders right now, SPY. Take a look at this. See that we didn't even come close. I maybe got too aggressive on that upside target because I was looking at this resistance. But look what happened. Like the rest of the markets, we hit resistance right at that 20-period moving average. Now, this is a different forecast than what we're forecasting with the other major markets. And let me just erase these lines to give you what I think is going to happen. We might see, because there's a gap right there. See that? There's a very slight gap. So on Monday, we might see a little bit of a rally. I don't think it's going to be anything major, but I think we're going to see a rally. And then 80% of the time after gaps fill, we generally see lower prices. Look down below. Again, the CCI heading back down, and that gap is above the market. So we have resistance at the gap fill point right there. We have another resistance level at the 20-period moving average. We have resistance up here, and we have another resistance up there over 455. So our members, our option traders especially, are making money with their put spreads because we're positioned with negative delta. So we're making money on the way down. Today was a very good day for us, and it's only going to get better from here. If you've been following along with my forecasts, I've been calling the tops. I've called the end of the bull market. I'm calling for crossovers in the major moving averages. And if you look at the spiders one more time, if we take a look at the moving averages right here, well, guess what? We have all of the major moving averages crossing one another. We had a 50-period moving average crossing the 100 this week. We are about to see that green line right there? Let me just erase everything here and show you as I magnify that. See that green line? That is the 50-period moving average. I think next week the 50-period moving average is going to cross that charcoal gray line. That is the Mac Daddy of all crosses because that's the 50 crossing the 200. And that's when you start to get serious sell programs coming in here. And that's going to launch some more pressure on the sell side for the general market. So be really careful with that. And again, looking down at the bottom right there, we have the CCI hinging lower. And we have a wide divergence between the percent K and the percent D right there on the stochastic. So very, very interesting. Now I'm going to flip back to my regular charts and take a look at the VIX. Again, if you've been following along since January, I've had this line, my forecast line on the VIX in place. I have not moved it, nor will I be moving it anytime soon. While I do think the VIX could drop a little bit next week, I think it's going to get right back on track, and I have my target up here at 41.88 on the timeline closer to the end of this month. I think we're going to get another spike in the VIX. And if you look at my cycle brackets, again, something I've left, every one of these cycle lows has resulted in a higher VIX. So we came perfectly out of that cycle low, and we're reaching close to a cycle high. If you look in the middle here, for the most part, you see these highs form close to the middle. And therefore, if you're looking at my timeline, that's very close to the middle of that high area in the cycle between the cycle lows. And so another reason why I'm not moving that. So if you're a VIX trader, you could look at trading some of the options there. Or if you think the VIX is going to go higher, you could look at possibly putting on some put spreads in the S&P 500. Now, one other thing I want to point out, because this came out through Twitter, Elon Musk put out this message. It's putting out a warning, actually. You don't see him do that all that much. But Starlink, which is his low altitude orbit satellites, are the only non-Russian communication system that's still working in some parts of the Ukraine. Now, if they start shooting down, I know it's not funny, but if they start shooting down his low altitude satellites, that could put some pressure on the rest of the internet. And then I'm thinking more along the lines of the banking sector. If the banking sector is interrupted by any kind of an outage whatsoever, even though Starlink is not like a major internet avenue, I do think it could put some pressure again on the internet. We don't know how that's going to affect the markets, but I just thought that was an interesting point to bring up because, again, it's something that he normally does not put out there in such strong words as, important warning. So keep an eye on that. Keep an eye on the news. Make sure you're cross-referencing your news so you're getting the true picture of what's happening and not misinformation. There's a lot of different news headlines, anything from, okay, Russia's attacking a nuclear power plant to, okay, we're leading into World War III. I would say make sure you're focused on the charts. Make sure that you're protecting yourself on the way down. And risk management is our number one priority. Again, please like and share this video. We're getting out to the masses thanks to you. And if you subscribe and click on the notification bell, you'll get notification when this video gets delivered to YouTube. So with that, have a great weekend, and we'll talk to you soon. So long.